it's me again. Wow, everyone's in a panic today. As I stated before, I never expected a special dividend anything to be covered in the earnings call from Meta. However, I was surprised when they did talk about it a bit, and I think that news is very positive. Hear me out, because a lot of people are in panic mode today. As last earnings release, a lot of people were in panic mode. Let's go over a few things and examine the math. Let's examine that math. Okay, issue number 1. On the 10K earnings report, the book value of the oil and gas assets are still in the $70 million range. It was at $73.5 million. If you look at the Q3 balance sheet, the oil and gas were at $72 million. What does this mean? Well, we know, if you've watched my channel, how underdeveloped oil and gas assets are valued. What is the value assigned to an underdeveloped oil and gas asset on the books? That's right. It is 0. Good job. Great job. You get a star. The underdeveloped oil and gas assets are always assigned at a $0 value. According to the Torchlight 10K from 2020 on page 29, it states that. And that's why certain assets have a $0 value, like the Oro Grande, because they're so underdeveloped. Okay, let's also remember that ConocoPhillips has the same methodology on their balance sheet. Underdeveloped assets are assigned a $0 value. You can't assign a dollar value if the asset's underdeveloped because you don't know how much it is truly worth on the books until it is in production. You can't be taxed on something you're not in production for. So remember that. My hopes remain high on the dividend. And if you still need further convincing, let's examine the math. The book value of these assets is at $73.5 million, right? We can't convert million. We have to convert millions to billions first to do this. So you convert it to billions and you have 0.0735 billion. Price per barrel, price over barrel. So 0.0735 billion over 3.2 billion barrels of oil, you're left with $0.0229 or 2.29 cents a barrel. Where can you buy oil in the ground, rights to oil in the ground, for only 2.29 cents a barrel? Tell me. Because we thought 20 cents a barrel was ridiculous, right? And everybody, if you walked into an oil company's office and said that, they'd say, get out of here. I was more polite. I'd said that they would firmly but kindly tell you to leave. Again, if you do the math with that balance sheet, you're only getting 2.29 cents a barrel. Where can you get that? That doesn't math out. That doesn't make sense. So let's look at page 34 of this. We will examine page 34. And applying acreage risk factor, collectively underdeveloped land assumptions. We've identified the evaluation of the acquisition date and year and fair value of the Oro Grande project property as a critical audit matter. A critical audit matter. A high degree of subjective and or judgment was required to evaluate the drilling location and underdeveloped land assumptions used to calculate the fair value of the Oro Grande project property. Minor changes to these assumptions could have had significant effect on the estimated fair value of the Oro Grande property. Additionally, the audit effort associated with the estimate required specialized skills and knowledge. The following are primary procedures performed to address critical audit matter. We evaluate competence, capabilities, objectively and independent evaluation firm engaged by the company. We involved valuation professionals with specialized skills and knowledge who assisted in evaluating the methodology used by the independent valuation firm to calculate the estimated fair value of the Oro Grande property, including determination of the number of drilling locations, forecasted production volumes per drilling location. So, based on what the test is, if it was an actual production well, what it could produce, not what it's currently producing. Drilling location, risk factors, number of underdeveloped land, acreage risk factor. Evaluating the company's determination of fair value per barrel forecasted. Look, fair value per barrel. It is based on barrels of oil, not on acreage as much. Like I said, the mathematical method that we've been doing for so many months now. Let's get back to it. Volumes and fair value per acreage, comparing the publicly available market data for comparable transactions or entities with acreage proximal to the Oro Grande project property. Okay, there aren't too many acreages proximal to the Oro Grande project property because it's on the other side of the Diablo Plateau Ridge. But there is a significant audit with minor changes again, and this seems like it's being very hush-hush, and I see this as a good thing. If you actually evaluate the fair market value on a per barrel basis or forecastable production basis on the full potential of the property, again, it's per barrels of oil in the ground, estimated with petrophysics reports, which isn't just a geology report. There's a whole slew of scientific tests that are done. Electrical tests, impedance tests, drilling tests. The price per barrel at $73 million in the balance sheet does not make sense. It would be 2.29 cents a barrel. If they were to show the fair value of the property, that would do an audit. That would significantly change the balance sheet of metamaterials. And there would be a big audit involved, because why did your company jump so high? Again, oil is hush-hush. This is still an underdeveloped asset, as this statement says. It is not in production. It's not capacity to produce quite yet. These were test wells put on the property. Although new horizontal wells are being drilled. As a result, you are still seeing that $73 million. Now, next one, let's go to that risk assessment. There was a risk assessment saying that the values could be much lower on the sale. This is a risk assessment. When you do a business analysis, you do a SWOT, strengths, weaknesses, opportunities, threats. This would be a weakness. This would be the risk. This was lumped in with Meta's risk assessment. If you're just going to cite this, read Meta's full risk assessment. This is the possibility, the worst case scenario, that the value of the dividend won't be as high as you calculate out to be. That's a risk assessment, legal statement. There's risk in every transaction involved. I will say, to say that the oil is worth only 2 cents in the ground is very small, because John Berta stated that 17 cents a barrel, which would be very small. And that was back in 2019. The oil market is much different. A lot of people will also try to tell me that it's based on averages over the past 5 years. If that was the case, that oil property and sales and forecast is based on the previous 5-year averages, there wouldn't have been a mass layoff in 2014 with the OPEC agreement, and basically all oil went and nobody did anything new. They were only rehashing, wells. They weren't drilling new well heads. They were just rehashing, going in lateral. My friend who has Marathon property down in the Eagle Ford, he was slated to get a couple new wells drilled on his property, but in 2014, Marathon decided not to do that, and they were just going in different levels laterally to get more oil and gas on his property. But with oil coming up again, especially with the Biden, as of last year, Marathon started putting more wells on his property. So that's a plus. That's a plus. It's not always based on the previous 5 years. I can tell you firsthand it's not. Because I know plenty of people who got laid off in 2014, and I know people personally affected by the Biden in a positive way by the lack of drilling on public lands because now Marathon's making new wells on his property. Also, the regulations went from one well every 200 acres to one well every 49 acres. So, and finally, let's go to the earnings call, which Smokey was able to live stream. So if you haven't seen it, go check out Smokey, Uncle Smokey Trades videos, link below. Uncle Smokey's Trades have broadcasted the earnings call. They did talk about the special dividend. Ken Rice stated that MMTLP is in fact valid, that buying these shares does entitle you to the special dividend, and he explained why, because you are buying somebody else's original preferred A share or a chain that led you to a preferred A share. So MMTLP does get you the dividend as stated by Ken Rice, the accountant, on an official PR release, the earnings call. That gives, I'm sure, a lot of people assurance about MMTLP. Again, when in doubt, think of the math. Oil, 1, does not assign a dollar value to underdeveloped assets. 2, the math works out to be laughably small. If you do it, 2.29 cents a barrel of oil in the ground. That's very small. 3, as stated in Ken Rice, there's lots of leases, lots of compliances that have to be met. There's a massive amount of mineral rights to this property. Don't forget, Torchlight was the lion's share of the holders to the rights of that property, but there's Founders Oil and Gas, which is the other property owner, and McCabe Petroleum, which McCabe was a part of Torchlight, but then McCabe Petroleum also had its own stake, its own working interest or revenue interest in the Torchlight property, but I'm sure that's pretty easily dealt with. But then there's the other shareholder in this property, stakeholder, would be Pandora Energy, which owns a tiny blip. And again, University Lands. Each lease agreement is a block of 686 acres, so divide 134,000 by 686. That tells you how many lease agreements there are for this particular hunk of property. The things that do make it desirable, remember, it's a continuous piece of property. It's not peppered, it's continuous. So that's very attractive right now to a lot of people who want to drill lots of wells. And the fact that around it's so underdeveloped, you don't have to worry about like looking too much at permits for other people. Are you going to hit their wells? There's not a whole lot of permits out there for the county. That's great. Seize the opportunity. Oil is rising. And there's immense pressure for people to produce more oil domestically. Okay, and one last thing. I'm also getting a lot of people saying, well, the earnings call didn't indicate that they had a buyer, and the 10K didn't indicate that they had a buyer. 1, okay, remember, they couldn't have sold the property before December 13th because the lease contingency had not been met. Okay, so on the books, it can't be sold before December 13th. And then you have Christmas. Naturally, to sell in that 2-week window is going to be next to impossible. 2, Meta Materials indicating that they didn't say that they had a buyer. All right, they didn't even say that they had a buyer. Find me an oil company that says we have a buyer currently. Find me a case that says that, because the cases that I've all studied for you, somebody took control of the assets months before an agreement or a sale was announced. All those companies, never once did they say we have a buyer. ConocoPhillips, when they bought the Shell asset, it was ConocoPhillips versus Chevron versus Devon. Shell never said in the September 5th earnings call or September 6th earnings call that they had a buyer for their property. It was announced later. And they never said that somebody even had taken control of the assets. Media was still speculating and said, well, they must still be selling because they didn't indicate that there was a buyer. Media still said that. Like I said, if it was easy for us to figure this out, media would have figured out the Shell and Conoco deal, almost a $10 billion deal way beforehand. Again, oil is hush hush. They're never going to say to you, we have a buyer in oil. It'll come announced when it comes. Find me a case where they said that. Oh, we have a buyer. Just because they didn't say, we have a buyer, or they didn't even talk about having a buyer. Find me an oil company that says, yeah, we have a buyer for this property. They never say that. There's NDAs at the wazoo. We know oil is hush hush. Keep these things in mind. Don't forget your training. Don't forget, we've trained up for this. You can't forget your training because you see numbers go down. Use math. Remember the training. Okay, guys, I will see you soon. Goodbye.